Trading was temporarily halted this morning as the value of dozens of regional banks plummeted when the market opened after Joe Biden claimed U.S. banking is safe. Major U.S. banks were also hit as contagion fears spread through the sector, with Wells Fargo plummeting 7.5%, Bank of America falling 7.4%, and the Citigroup plunging 5.8%. Regional bank Western Alliance saw its stock price plunge by 75%, while shares in First Republic fell by 67%. Trading circuit breakers were swiftly implemented to protect the market from rampant volatility. The Insider reported Friday's Silicon Valley Bank collapse was the byproduct of the Federal Reserve hiking interest rates by 1,700% in less than a year. After risk-free treasuries started generating higher returns, clients started withdrawing their money. While Treasury Secretary Janet Yellen noted there will be no bailout for SVB like those during the 2008 crisis, she said there is a plan for assisting depositors at SVB. And then on Sunday, U.S. regulators took control of Signature Bank, announcing emergency measures to ease fears of their depositors. Signature was a favorite bank for cryptocurrency companies. Officials did say the New York bank's depositors will be made whole. As for the 16th largest bank in America, Silicon Valley Bank is now controlled by the Federal Deposit Insurance Corporation after a request was made by California state bank regulators to address the second biggest bank failure in American history. The bank had risen to $200 billion in major cash deposits earlier this year. Bernie Marcus, co-founder of Home Depot, told Fox Business News that the policies of the Biden administration may have hastened the demise of SVB.
I think that the administration has pushed many of these banks into more concern about global warming than they do about shareholder return. And these banks are badly run because everybody is focused on diversity and all of the woke issues and not concentrating on one thing they should, which is shareholder returns. Instead of protecting the shareholders and their employees, they're more concerned about the social policies.
It has also been revealed that Silicon Valley Bank CEO Greg Becker cashed out stock options in the weeks leading up to last Friday's collapse, and employees were given bonuses hours before the FDIC took over. Joe Biden addressed the government's response to the bank failures earlier this morning.
On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund.
The president did not take any questions after his statement. Tim?
Thank you, Fior. Now let's bring in America's historian and the founder of wallbuilders.com, Victory News contributor David Barton. David, the banking collapse that this shook Americans and the investment company, Treasury Secretary Janet Yellen shared these comments on Silicon Valley Bank's failure. Take a listen.
Whenever a bank, especially one like Silicon Valley Bank with billions of dollars in deposits, fails, it's clearly a concern.
Now, her response to one of the biggest banking failures in history and the additional fallout seems to be a little bit mundane, David. Now, obviously, we don't operate in fear here, but what should Americans be watching for in the days ahead?
Well, it is a mundane response, but that's because it's a really serious crisis. I was watching over the weekend from a lot of the economists we deal with, and they think that this could be a whole series of things. Now, is it as big as, let's go back to 1832, Andrew Jackson, much smaller nation, much smaller population, 800 banks went upside down at that point in time. So we're seeing numbers that suggest that it could be really bad. We'll see. The federal response is really important here. One thing to keep in mind, everybody needs to know that what's going to be made whole here are the federal depositors that have insurance. And in any bank, if you're in a credit union, if you're in a bank, make sure that it's FDIC insured, and it's for each investor or each client up to $250,000. So if you got your retirement in a bank and it's more than $250,000, you'll only be made whole for $250,000. So if you have money in your bank, look and make sure that you have it in different banks if you get more than $250,000, or make sure that you do have it in an insured account. A lot of credit unions are not insured. Get it in one that is. So there could be a lot more of this coming in future days.
That's good advice, David. Now